Okay, thank you for joining us. My name is Troy Baker. I'm the Educational Foundation Director for the Better Business Bureau Serving Western Michigan. I appreciate you joining us today. I wanted to go over a couple housekeeping things before we get started. Everybody is on mute. We are recording this and we'll take questions at the end of the presentation. If you do have a question, please type it into the panel and we will address it at the end. If you are having some audio or video issues with this, you might need to check your Wi-Fi, maybe log out and log back in may help as well. So as we get started, I'd like to introduce Phil Catlett, President of the Better Business Bureau Serving Western Michigan.
Thank you, Troy, and welcome everyone. We are so grateful to Kathy and Brian for being our presenters today. It's wonderful to have access to the people really making the decisions and how the SBA programs work, and particularly the payroll protection plan loans that have been so valuable in keeping our economy rolling and keeping employees paid during a very challenging time. This is part of the BBB Connects webinar series in our mission to make West Michigan the most trusted marketplace in America. And we love having accurate and valid information to provide to you. Also want to take this brief moment to mention our Trust Award ceremony, which is coming up Thursday night at 7 o'clock, where we're going to give our annual award virtually this year, but you could watch online, to a person that has exhibited all the greatest tendencies in building trust internally in their organization as well as externally. And you'd be able to find out more information on that at bbb.org/western-michigan. And without further ado, thank you, Kathy and Brian, and it's time for your presentation.
Thank you so much, Phil, and thank you, Troy. We really appreciate the opportunity to be with your members today and talk to you a little bit about the PPP program, as well as some of our other COVID relief programs. So we have a lot of information to share, and we're happy to entertain any questions. So please put them in the chat box, and we'll be happy to respond to them. I'm just going to start with a brief introduction. So today we're going to talk about coronavirus relief options through the Small Business Administration. And early in March, the agency made a disaster declaration for every county in the country due to COVID-19. And that enabled the SBA's Economic Injury Disaster Loan to come into play in April. Congress passed and the president signed the Paycheck Protection Program into law. And early on in March, we also entered into a program called SBA Debt Relief. So we're going to talk about all three of those today. And I am going to now invite my colleague, Brian Picarazzi, to walk you through the Paycheck Protection Program. Brian?
Thanks, Kathy. So we are going to take a few minutes to go over the PPP program. I assume at this point that everybody's aware that we did stop taking applications for PPP on Saturday. The program expired, but we're going to go through this and hopefully it'll answer some questions you may have about the program. So for the PPP, in terms of eligibility, you can be a business of under 500 employees or over 500 but small by SBA size standards. You can be a tax-exempt nonprofit 501c3, veterans organization, a 501c19. Tribal concerns are eligible, as well as sole proprietors, independent contractors, and self-employed. The purpose is for businesses to use the money for payroll, interest on mortgage, rent, and utilities, and the loan can be forgiven or will be forgiven if you've used at least 60% of your money on payroll. There's some requirements for that, but if you've used at least 60% of your money on payroll, it can be forgiven, and you can use up to 100% on payroll if you choose to do so. So PPP loans can be up to $10 million, a 2-year term. It's a 5-year loan or term if your PPP was made after June 5th, or if it was made prior to June 5th, you can talk to your lender and can switch it to a 5-year term if agreed upon by the lender at 1% interest. This would be a portion that, for some reason, if it would not be forgiven, would be the only way this would come into play. The loan payments are deferred per the PPP Flexibility Act, and we have a slide on that later. There's no fees, collateral, or personal guarantees required. For these loans, you would have applied directly with your lender. We have some documents up on the site, but as I said, as of Saturday, there's no longer applications being accepted. So the PPP Flexibility Act extends the PPP loan maturity date from 2 to 5 years. Loans made on or after June 5th will automatically have a 5-year term. Anything made prior to June 5th can be amortized out to the 5 years if the borrower and lender agree to amend the loan documents to provide for that 5-year maturity. So essentially, if you had your PPP funded before June 5th, you can call your bank if you haven't already and ask them to extend it out to the 24-week period and 5-year term. So the Flexibility Act, again, also extends the covered period for using loans from 8 weeks to the earlier of 24 weeks after the loan is dispersed, or December 31st, 2020. So if you're an existing borrower, you can still elect to use the 8-week covered period, but anything after June 5th will automatically default to the 24 weeks. Anything prior would be the 8 weeks, and you would need to call your lender to get it moved to the 24 weeks. You can pay this thing off, or you can apply for forgiveness at any point during this time period if your funds have been exhausted. The Flexibility Act also extends the deadline for rehiring employees who are laid off or whose salaries were reduced prior to April 26th for the purposes of avoiding a reduction in loan forgiveness from June 30th to December 31st, 2020. It also creates an exemption from rehiring requirements for purposes of avoiding a reduction in loan forgiveness if the employer is able to document the following: an inability to rehire individuals who were employees on February 15th and an inability to hire similarly qualified employees for unfilled positions on or before December 30th, 2020, or an inability to return to the level of business activity the business was operating at before February 15th due to compliance with certain federal sanitation, social distancing, and worker or customer safety requirements. So there's a couple things in there. If you were unable to hire or bring employees back because for whatever reason, if they were worried about COVID, or if they didn't come back to work, if you sent a letter or an email to them telling them that they can come back to work and they didn't, you will not take an FTE hit for that. So as far as the inability to return to the level of business activity due to compliance with certain federal sanitation, social distancing, and customer safety requirements, note that those are federal requirements. So if there was federal orders that did not allow that to happen, you would not have a hit to FTEs. The Flexibility Act also extends the PPP loan deferment period to either the date on which the amount of forgiveness is remitted by the SBA to the lender, or 10 months after the last day of the cover period if the borrower fails to apply for loan forgiveness within that 10-month period. So essentially, you can apply for forgiveness. Actually, starting yesterday, the portals have opened. Not all banks are taking applications at this time, but as of yesterday, the portals have opened for forgiveness. But you have until 10 months after your loan was funded to apply for forgiveness. If you don't apply within that 10 months, then the PPP will be non-existent and it will convert to a loan. We have, so there's two ways to apply for forgiveness. We have an easy application and a full forgiveness application. So the easy application would be applicable if you're self-employed and have no employees, or you did not reduce the salaries or wages of your employees by more than 25% and did not reduce the number of hours for employees, or you experienced reduction in business activity as a result of health directives related to COVID-19 and did not reduce the salaries or wages of their employees by more than 25%. So if you're able to apply through the easy application, it is just that. It's a little easier. The application requires fewer calculations and less documentation for eligible borrowers. Both applications give borrowers the option of using the original 8-week covered period if your loan was made before June 5th, 2020, or the extended 24-week covered period if it was after that. So the application forms are going to, yes.
No, go ahead. I was just going to say the next slide will show the links and we'll share this with everyone.
Yep, certainly. So when you look at the application forms, you're going to see a calculation form. You're going to see an application. There's going to be instructions for borrowers. There's going to be an application, a separate application if you qualify for the easy form, and there'll also be a separate set of instructions for borrowers while using that easy form. And then the next slide will be what Kathy mentioned. We've provided some links to those applications. You can also find those at www.sba.gov//PPP.
Great, thanks, Brian. So the second loan program we want to talk about today is the Economic Injury Disaster Loan Program. I should say that this program is not new. It's been in existence since the beginning of our disaster loan program. So when we have a physical disaster such as a tornado or a hurricane or an earthquake, we have physical disaster loans for renters, homeowners, business owners, to replace the physical property and the real property that was destroyed. In addition, oftentimes we will do a declaration and have the economic injury disaster loan kick in as well. And this is intended to help you cover working capital needs if your business is has suffered because of a disaster. So as I said at the beginning, in March, our agency worked with the White House to get every county in the country declared a disaster because of COVID-19. And so businesses are eligible to apply if you meet SBA size standards. Agricultural businesses can apply, small agricultural cooperatives, small aquaculture businesses, and most private nonprofit organizations. Let me say this program is open. It closed briefly earlier this summer and then reopened only for agriculture businesses. And now it's reopened and there's still money available. We don't have any information on a closing date. And so that loan program is definitely available right now. Some terms and conditions on the, we call it EIDL loan, EIDL. So the interest rate is 3.75% for a small business, or if you're a nonprofit organization, it's 2.75%. This use of proceeds, it's a little bit more flexible than the PPP program. However, this is not a forgivable loan. I also should mention that amortization can go out as long as 30 years. And so the monthly debt service, the loan payment is relatively small depending on the amount of the loan. How can you use the funds? Any fixed debt payments, principal and interest, payroll. I should say you don't want to double dip. And if you have a PPP loan and you want it to be forgivable, you'll want to use that primarily for payroll, at least 60%, in order for your loan to be forgiven. And then if you have an EIDL loan on top of that, you want to use it for things like your debt payments, your accounts payable, other bills that you have, or things to keep the business open. You don't want to use it for an expansion, to buy a new building, to pay off long-term debt. Maybe you have a loan with a lender for 10 years and it's at an 8% interest rate. You will not want to take this loan and then refinance your other loan. That's not an allowable use of proceeds.
Yeah, Kathy, can I just real quick say, I just want to drill down on that a little as it relates to mortgage payments or rent payments. So if you do own your building and you got an EIDL loan, you own your building at, 20 years or 10 years at 7%. You cannot pay off, I just want to reiterate this, you cannot pay off that mortgage with your EIDL loan funds. You can make the monthly payment on it, but you cannot pay it off or refinance real estate debt.
Yep, absolutely. Thank you for reiterating that. There's no collateral on the EIDL loan if your loan is under $25,000. If you have, if your loan is over $25,000, we definitely will take personal and business assets. If you have enough assets in your business to fully cover the loan, and we're not interested in your personal assets. Oftentimes, though, folks don't have enough of business assets to cover that loan rate on a 1-to-1 ratio and to fully collateralize the loan. So SBA will look to personal assets. We prefer real estate. We will take other forms of collateral, but real estate is our preferred asset. We will take a second, a third, even a fourth lien position on your home if that is the situation that you're in. However, I do want to emphasize that lack of collateral is not a reason for decline. So if you have the other requirements that the underwriters are looking at, and you've offered all the collateral you have, and you still don't have enough to cover the amount of the loan, that's not a reason for decline as long as everything else is good. Brian, do you want me to take this, the debt relief? I'll go ahead and take it.
I can talk about it. No,
Perfect.
I can talk about it. It's no problem.
Cool. Thank you.
So part of the CARES Act was SBA debt relief, and essentially you can get SBA debt relief if you have current SBA loans out there, not EIDL or PPP, but regular SBA loans. So if you have a current 504 loan, a current 7A loan, or a microloan, you would be eligible for SBA debt relief. So you can also take a new 504, a new 7A, and a new microloan between March 27th and September 26th, and you would also be eligible. So as we kind of move through PPP expiring, if there are capital needs, if your business still has capital needs, it's a good time to maybe look at traditional SBA financing because we do have these SBA debt relief programs out there. So loan-specific size of loan, interest rate, term, fees, use of proceeds, and collateral are determined by the loan program. So whether you use a 504 or 7A, that program would determine how you could use the proceeds. So on regular conventional SBA loans, personal guarantees are required. So through the debt relief program, the SBA will cover principal, interest, and fees for 6 months. So you get 6 months worth of payments made. So if you currently have an SBA loan, you've probably already noticed this because it happens automatically. So your payments will be being made by the SBA right now for 6 months worth of payments. If you get a new loan that is fully dispersed by September 27th, you can't just apply for it. It has to be a funded loan. Then you could also get, or will also get, the first 6 payments paid by SBA. So it can provide a little debt relief for you. There's a link there if you have an interest in more information about the SBA debt relief program.
I also want to encourage people to go to sba.gov/MI and sign up toward the bottom of our homepage, sign up for our email updates because we're doing a number of webinars on our regular financing. Brian and I will be conducting at least a half a dozen between now and September 30th. We call Team SBA Financing Roundtables. It's something that we have been doing for years in person, but we're doing them virtually now. And we cover topics such as what the microloan program is about and how you can use it, what is 504 and 7A. And we're happy to answer any questions on that if you would like us to go into a bit of detail. And again, you can learn more about the debt relief program at the link right here. So we have a lot of...
Kathy, I should just mention real quick, there's one little bullet point I skipped over. So for our regular, and I know it's a confusing time for everyone with SBA, we have PPP, we have EIDL. PPP, you apply through lenders. EIDL, you apply directly through SBA. For the regular 7A, 504 loan programs, the SBA is not a direct lender. You would apply for both of those programs through a lending institution.
And if you want to send us, I'll put an email address later, and certainly feel free to reach out to us, and Brian and I can, we're happy to entertain any questions and answer questions if you are looking for new money and looking to explore the SBA products such as 504-7A or the microloan program. You're the Western Michigan BBB, and so we have at least 3 different micro lenders that cover your area. One called Northern Initiatives, the Grand Rapids Opportunities for Women, and Cornerstone Alliance are 3 micro lenders that serve West Michigan. And if you're looking for, just a bit of money under $50,000, we can put you in touch with those micro lenders. And then if you're looking for a participating lender in a regular guarantee 7A program, or even in our 504 program, we can put you in touch with lenders that are participating. We can't recommend a lender to you, but we can tell you who is active in the SBA program. Great. So we also have lots of resources available. These are traditional resource, we call them funded resource partners. And we have been funding these for years and years and years. And now during COVID, these partners have received, under the CARES Act, considerable funding in order to increase their reach and to hire subject matter experts that can directly work with you. There's never a cost for these experts. And we are looking at, we're hiring people that have HR, expertise, financial analysis expertise, social media, pivoting to e-commerce, reopening, obtaining PPE at a reduced rate, how to work through the state of Michigan with the Michigan Economic Development Corporation, for example, on acquiring PPE. So they're just a wealth of experience and information, and I'll just go through them very briefly. The Small Business Development Center Network is a national program. We have 11 regions throughout the state. The best way to contact them is to go onto their website, www.sbdcmichigan.org, and you can sign up for consulting right from their homepage. It's very easy. An intake consultant will get in touch with you and then connect you with a business consultant that is appropriate for your business need. We have 3 SBA funded women's business centers, one in Livonia, one in Grand Rapids, and one in Benton Harbor. All 3 of them also do microlending to both men and women. They don't discriminate, but they primarily serve women business owners with technical assistance in mentoring. And then speaking of mentoring, SCORE, Mentors to Small Business. This is a national association, again, funded in part by SBA. They charge nothing for their services, nor do they receive any compensation for their services. They're strictly volunteer men and women who have either been in industry or have experience in business ownership. And again, there's just a wealth of information and all kinds of subject matter experts that are willing to mentor small businesses. And then we have a special organization called Vet Biz Central. It's one of many veterans business outreach centers throughout the country. Vet Biz Central is staffed by veterans, and they serve veterans, the military community, and spouses of veterans on a wide variety of issues related to entrepreneurship. And so, again, these are all organizations that have really pivoted to help you now recover and get through the COVID pandemic. I would encourage all of you to reach out. No, there's never a charge for any of the consulting, and I believe most of the webinars now are being done for free as well. Here's some information on how you can get in touch with us and how you can keep updated on what we're doing at the Michigan office as well as on a national level. So you can sign up for our updates at sba.gov/updates. That'll get you to the national newsletters. If you go to sba.gov/MI, you can sign up for our local updates. We're also tweeting our information that's relevant to small business owners at SBA_Michigan. If you guys have any questions or you think of something that you wish you would have asked now, a week from now, or an hour from now, send us an email, please, to Michigan, spelled out, at SBA.gov. That's the easiest way. We check that constantly, and we will get back in touch with you. If you have questions on your EIDL loan, you can email us at michigan@sba.gov. If you're having trouble getting through the disaster customer service email, which is disastercustomerservice@sba.gov, or you can call them at 800-659-2955. It is difficult sometimes. I won't sugarcoat it. They are fielding many, many phone calls and trying to answer many emails. So if you can't get through, if you've at least tried a couple times, send us an email at michigan@sba.gov, and we will escalate your question. We have every district office has a contact at the disaster office. So that's the conclusion of our formal presentation, but we're happy to answer any questions.
Kathy and Brian, that was an excellent, informative presentation. And I'm just going to ask one question before I hand off to Troy to provide you the questions that people have been putting in online. And that is, a lot of us are first-time SBA loan recipients due to the circumstances of COVID-19. And in terms of record keeping, in order to make sure that we're meeting the standards, are there any helpful words of advice you might give or suggestions that just things that are being kept track of as we go and how we're spending that money so that when you ask for it, we can get it to you in the way that SBA would want it?
So I'll answer and then throw it to you. Go ahead, Brian.
Yeah, no, it's a good question. We get it a lot. So, it really should be fairly easy to do because we've set forth the guidelines that at least 60% needs to be on payroll, and then rent, utilities, and there's some other business expenses in there that are eligible uses. So the payroll, would be your 941s. So that's a fairly simple way of proving what you spent on payroll, and then just copies of bills and payments for rent, utilities, mortgage payments. It shouldn't be anything too crazy. So, I would keep it simple with that. If you have some other circumstance that's kind of odd and you're looking for some advice on how to document it, certainly reach out to us. But I think if you stay with that, that's the best bet.
And I'll also add that this Friday, August 14th at, I believe it's 10 o'clock, we are conducting with our Small Business Development Center a webinar on record keeping, and Julie Oldham is a business consultant who has put together a presentation and is also a CPA. And the Small Business Development Center Network, the business consultants, although they don't have all the inside answers, we don't even, forgiveness is just now opening up yesterday. They do have some templates and a framework that they are happy to share with anyone on this call or any of your members to kind of get through that record keeping process. So, I encourage people to join us this coming Friday, and Troy and Phil, I can send you the link, or I can actually send you a bulletin that we sent out. And if you want to share it with your members, that would be super.
We'd be thrilled to do that, and thank you for really clear guidance that you're giving. Troy, I'm handing off to you now.
All right, thank you. And we will include that. We do have a couple questions asking about sharing this presentation. This is being recorded, so we will send a recording of this conversation, but we'll also include a link to this PowerPoint as well. So you'll have that along with, as Kathy said, the document there to help better understand this. So one question that came up, with the EIDL, will SBA pay the first 6 months of payments and interest the same as SBA debt relief programs?
So no, the debt relief programs does not cover EIDL. It's important to mention though with EIDL, and I don't know that we did it in the slide, But with an EIDL loan, there's an automatic 12-month payment deferral with that loan. So if you were to get a loan today, your first payment would not be due for the first 11 months. So your first payment would be due on the 12th month after you receive the funding.
Okay. One person says they're an S Corp. Is gas for company cars a forgivable expense?
I believe that it is, yeah. So I've seen, and a good place to look for this stuff. So yes, it is. Fuel and transportation costs are mentioned in the IFR. So a good place to find some of this information is sba.gov/PPP. When you go there, you're going to see the federal regulations. There's going to be frequently asked questions. There's going to be updates to the federal regulations. And a lot of this stuff will be answered in there. So it's a good place to check for any questions you have first. And then, you know, if you can't find it or whatnot, reach out to us first. It doesn't really matter, but that's a really good resource to find information like that.
And when Brian refers to IFR, it's interim final rules.
And lots of interim right now. This one's from the nonprofit side. Are 501c6s eligible? And if they already received money, are they able to keep it? If not, what do you suggest they do?
So I assume that they're talking about PPP. So 501c6s were not eligible for PPP except for two very narrow exceptions, which were for electric co-ops and for telephone co-ops. So if you received money and you were not one of those two, 501c, it wasn't eligible or isn't eligible, and you may want to consider reaching out to your lender and seeing what your options are.
And I would encourage people, as we're going through this, if you do have questions, please type them in. We're going to try to get to everything here. One question that comes in is, what sort of documentation do we need for employees who have quit or never returned to work?
Yep, that's a good question. So really, there's no mention of specific documentation. So you can send your employers a letter when you are calling them back to work, or you can send them an email letting them know that, you know, they're due back to work, and if they don't report or if they don't answer, then you would, I would document what you sent them, and then you would be covered by you wouldn't be hit for FTE reduction.
And I would also suggest, again, business owners should contact the Small Business Development Center, because consultants are sharing lots of best practices in terms of, here's a good format, here's a letter that you can send your employees that should be sufficient. So that's another reason to connect with our business consultants.
And on that note, in the documentation and a lot of collection, what documentation should businesses be collecting now to have ready to provide in order to get that forgiveness?
Yeah, again, I think I would start with the 941s for your payroll. Obviously, I think that's probably, most people have those, and that's probably obvious. So the payroll part should be easy. And again, if you're paying rent or mortgage or utilities, I would just have on hand a copy of the bill and a copy of the payment. And I think you start there, because that's going to cover all of this program. Those are most of the eligible uses. So it should really be fairly easy to document.
This person says, what if I used some of the funds for non-payroll taxes or non-utility rent payments? So what if I use some of the money outside of those categories?
Yep. So the portion that you spent on ineligible uses will not be forgiven. So that would convert to a loan at 1%.
Okay. are you able to use payroll exclusively towards the PPP loan forgiveness? Do you have to categorize other things out, or can you simply be covered under your payroll?
No, so I think that question is, can I use, so the standard or the minimum for PPP is to use 60% of that money on payroll. So I think the question that you're asking is, can I use 100% of my PPP money on payroll, or can I use 80 or 85 or 90%? And the answer is yes. You have to use at least 60% on payroll. You can use the whole thing on payroll, and it will be forgiven.
Okay. This person says they're hoping to stretch out the forgiveness PPP funds until the end of the year, at the end of December. Is that something they can do right now?
Yeah, so if you got your PPP funds after June 5th, yeah, it's an automatic 24 weeks, which would take you through the end of the year. If you got it before June 5th, you'll just have to call your lender and request that you take advantage of the 24-week. If you got it before, it will default to the 8-week period, but you can still call them now and extend it out.
But it's the lesser, correct me if I'm wrong, right? It's the lesser of 24 weeks or December 30th, correct?
Yeah, correct. So it wouldn't necessarily be extended through the end of the year, but in that case, you could extend it out 24 weeks. That's a good point.
Okay. When talking about the deferral of 12 months, when does the interest begin accruing? Is it the end of the 12 months, or is it when the money is dispersed?
Yeah, it's when the money is dispersed. So you won't have a payment for the first 11 months. Your first payment will be due on that 12th month, but interest does accrue in the meantime.
From the date the loan was funded.
Correct.
Yeah.
All right, so this person says they're struggling with their calculations because they received their funds in April, but couldn't open their business back up and bring staff until June. And business still isn't where it was. They haven't brought everybody back. When do the calculations for forgiveness work into that? And what advice do you have for somebody that had to wait in that period before bringing them back?
You know what? That's a good question. It's kind of a unique scenario, and I would actually suggest that person reach out to me individually so we can get the story and try to give a concise answer.
Okay, and what I will do is I will share your contact information with that person, and we'll get that worked out. Can a business's bank statement be submitted as a record of payment? Would that be sufficient?
I would think so. You know, I don't know that there's any, I don't know that, so let's just back this up on forgiveness. So I don't even want to say I don't think so. What I will say is we're still waiting guidance on the specifics of what you will need for forgiveness. I think I would just say in general that if you have paid an expense and you have the bill and you can prove a proof of payment, I think that would, you know, reasonably be considered proof. But I can't say exactly right now what is and is not considered proof.
Mm-hmm. Is it all right to give bonuses as part of the payroll that's used in this?
So yes, you can pay your employees more than they were paid before this. So you can pay bonuses. You just have to remember that the only piece that can be forgiven is wages up to $100,000 per employee. So if for some reason your bonuses took an employee over $100,000, that portion over would not be forgiven.
Okay. There were a couple people who joined us late. So just to reiterate, when should businesses start submitting the forgiveness forms, and where should they send it?
So I think the safest thing to do is to reach out to the lender that you got your PPP, you put your application with, and ask if they are accepting forgiveness applications yet.
Okay.
Because our portal just opened yesterday for forgiveness. And some lenders may be ready to go, some might not be.
And just like we saw at the rollout, some were a little faster at it than others.
Sure.
So, all right, if there looks like that's the end of the questions. So I guess Brian and Kathy, any final thoughts before we wrap things up here?
Thank you very much for being on the call and having us present. We're here to help. We've got lots of resources available. If you are struggling through anything, connect with us and we'll try to figure out what course of action you should take. And I wish everyone all the best, and let's hope you all have a decent recovery in this scary time.
Yeah, but I just echo what Kathy said. Thanks, Phil, Troy. Thanks for having us on. Thanks for giving us the opportunity to get this information out there. And anybody that's on this webinar or call, please don't hesitate to reach out to myself or Kathy or any of the email inboxes that we gave you with questions.
We will certainly share that information and share out, again, we will share out a copy of this webinar as well as the documentations that went with it. Thank you again, Brian and Kathy. And for Phil, I'd like to thank everybody for joining us. Have a great day. And if you have any questions at all, feel free to reach out to us at the Better Business Bureau. We're happy to help.